Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and joining me today is Santosh Nair, aka Santo. Santo, great to have you on the show with me today.
Likewise, Nandita.
Given the fact that we've seen quite a few, volatile times recently, we have still managed to recover after slipping below that 19,000 mark, right, Santo? But before I go forward and talk about today's market action, I want to understand what's your expectations from Samvat 2080 going forward, because 2079 Samvat has been extremely volatile, as we all know, even though we hit a fresh high in the year gone by.
Well, typically when you had a fantastic run like the one we saw over the last 1 year, particularly in mid and small caps, the probability is that in the year forward those kind of gains don't typically get repeated. It would I'd be really surprised if the market or many of the stocks which have had such a good run in the small and mid cap space over the last year, if they are able to repeat their performance in the coming year as well. So the overall, if you look at it from a macro picture, the outlook still seems to be positive. India is better placed than most other global economies. That said, I guess investors will need to look at pockets which have underperformed and then see if there is reason for things to look up in the coming years, particularly large caps which have been underperforming for a while now. Markets not really been focused there, and considering that you've had fairly good growth in earnings, decent growth in earnings over the last couple of years, valuations in many cases appear to have become quite reasonable. So I think, Nandita, the trick will be to look for stocks probably which have not performed of late, and then see if there is a cause to invest in them, rather than again doubling down on the same set of stocks which have done well in during the last 1 year.
All right, that's the expectation from the market as we step into a new Samvat. But let's recap today's market action, Santo. 19,450, we were hovering around that level. Of course, we saw a choppy ride today as well. We've seen mid caps outperform, small caps outperform benchmark indices, and that continues from yesterday. And even if you look at the advanced decline ratio, they were tilted in favor of gainers, so nothing to worry about there. If you look at the sectoral movers, Pharma emerged as a top mover. In fact, metals and Realty were once again doing well, but what didn't do well was the banking pack. Of course, banking, as we all know, has been fairly choppy, and we've seen the Nifty bank, in private banks rather, they have been underperforming, and that continues today as well. If you look at some of the OMCs, they were doing extremely well today, given the fact that we've seen crude slip back to $81 per barrel level. That's I think a 3-month low for crude prices, and that comes as a boost for some of these OMCs like BPCL. That was the top Nifty gainer today, Santo. Aside of that, HPCL has also done fairly well, and you have IOC also doing fairly well. Anything in the mid cap space that caught your attention today, Santo?
Well, before I come to the mid caps, Nandita, you're making the point about oil marketing companies. Yes, they've had a good run of over the last few days. One thing which has worked in the favor of oil marketing companies is the fact that crude prices have been slipping, but on the other hand, there's also this risk which many analysts have been mentioning, that is, if the war in the Middle East continues for longer than expected, because there's still no clarity on which way crude prices are headed. Because one thing is that the transition to clean energy doesn't seem to be all that smooth as it was made out to be earlier. Now, if oil prices were to rise higher from these levels, one of the problems for oil marketing companies like HPCL, BPCL and IOC is that typically in an election year, these companies have very little
headroom.
They have very limited pricing power in that sense. So if the prices move up, they will have to they'll have to keep the prices fixed at that level, which means that there will be under recovery, and so the whole story that is being made about attractive valuations, that may hold true if probably you see crude prices slipping further from these levels, but were crude prices to rise, then I think it would be a very different picture.
Right, I think that's about the OMCs, of course. Crude prices, at least for now, have slipped from 95 levels to $81 per barrel level. So that's some bit of a respite coming in for some of these oil marketing companies. Aside of that, Santo, if you look at some of the other movers from the mid-cap end of the markets, we had the likes of Prince Pipes. I think double-digit gains coming in on this stock on the back of good earnings. HPCL, as I mentioned, Apollo Tyres, Poonawalla Fincorp. These are some of the result reactions that we saw. On the losing end, you had the likes of Rain Industries, Easy Trip that also reported its numbers today, BHEL, CRISIL and Delta Corp, that's also among the losers today. But Santo, aside of that, let's talk about some of the stocks that are on our radar this afternoon. What is your first, pick?
Well, I'll start with Info Edge. The stock was one of the gainers, notable gainers in today's lackluster session, rising close to about 3%. Now, decent set of numbers year on year. The revenues has shown a good growth, but the main thing here, I think, what analysts are talking about is that the contribution from the non-Naukri portals, that's finally seems to be showing some kind of attraction, and that is what seems to have got analysts positive. So Bernstein has an outperformer rating on the stock with a target price of 4,800 rupees, and it is said that the revenue growth at 12% year on year has been quite steady. Nomura has a price target of 5,200 for Info Edge, and the company was on CNBC TV 18 yesterday, and in fact the management has said that they are seeing the IT part of hiring that may be close to bottoming out now. That's very crucial for the company, because the company in its recruitment business earns about 55 to 60% of the billings from the IT services industry. So that's been under pressure for quite some time now, and that's also reflected in the stock price. You're seeing some kind of renewed interest in the stock over the last few days. It's risen close to about 10%. So that, I think, the company saying that the IT job market is close to bottoming out, I think that's something that the market is seems to be taking positively.
Right, of course, as you mentioned, the stock also was fairly buoyant in today's session. Aside of that, the first pick on my, the first stock rather on my list today is Jyothy Labs. Good set of numbers. In fact, if you look at the stock, it has doubled in a matter of just about 4 months or thereabouts. In fact, shares have been rallying on improving fundamentals. Margins, in fact, operating margins have been expanded by 300 basis points in just a matter of 3 quarters. That's something which is a big positive, and also the fact that the company has been gaining market share from its larger peers, right? At a time when you are looking at these FMCG firms talking in volume growth of 3%, 4%, Jyothy Labs has got in fact has clocked a volume growth of a high single digit 9% on a YY basis. If you look at the various divisions, the fabric care business, the washing business, personal care items, like toothpaste, etc., they are all gaining market share. In fact, they've all done pretty well. If you look at the sales of personal care items, those that part of business has grown 22% on a YY basis. And if you look at the action in this stock, retail and foreign investors have turned buyers, even though domestic mutual funds have offloaded some bit of stake. But Pulak Prasad's Nalanda funds that owns 6% in the stock, I think since 2022, if I'm not mistaken, and they have continued to stay put in this stock. And of course, if you look at FMCG stocks, as we all know, are high PE stocks, right? But here the price to earnings ratio for this particular stock is 46x or thereabouts, compared to the sector PE, which is largely in the range of 60x, etc. I think it's a little lower. So I think Jyothy Labs firing on all cylinders at a time when some of these FMCG companies are turning to premiumization, but this company with its low price products is is being able to capture market share or wrench market share from some of these larger players. So that's something that kind of makes me fairly okay on this particular stock, and the stock also I think gained somewhere around 3% or thereabouts in today's session.
Well, a dramatic comeback there. The stock has been doing pretty much nothing for 5 years, and suddenly in just a matter of 5 months the company has the stock has managed to reward the shareholders who have been fairly patient. Well, the last stock on my radar this afternoon is Cummins India. Now the numbers were soft. I mean, if you look at it either sequentially as well as on a year-on-year basis, but the management commentary has been fairly positive. The stock has been under pressure over the last couple of months. It did recover somewhat today, and was among the prominent gainers of the day. Now, coming to the management commentary, during the con call, the company said that it expects double-digit growth in the current year, and that demand continues to be quite robust in the domestic market. Also, one of the major concerns of analysts was that raw material prices could be, raw material prices could inch further higher, and that in turn could put pressure on margin. But the company has said that it expects raw material prices to remain at current levels for the rest of the year, and also it has said that more than 70% of its sales were from the CPCB 4+ product. CPCB is Central Pollution Control Board, and 4+ is the most stringent form of emission norms. So, the company has said that much of its sale has come from this product, which is the CPCB 4+, which is the latest range of products.
Right, and I think it's on the back of this raised guidance that we saw the stock doing fairly well in today's session. In fact, if you look at the stock over the last 1 year, Santo, it has rallied somewhere around 30%, and now with this guidance revision, looks like we have some good times ahead for this particular stock. But the next stock on my list today is Alm Labs. Of course, a strong set of numbers. Profits have grown in excess of 85% on a YY basis. In fact, EBITDA margins have also jumped above that 20% mark on a YY basis. It's the improved product mix in the US market and lower input costs that have aided margins for this particular company. And the company is also looking for inorganic opportunities, in chronic therapies, in consumer healthcare, etc. So it's looking out for buyouts going forward because of the excess of surplus cash that it has on its books. And it has also guided for high single-digit growth for its India business. That hasn't done all that well, given the fact that there's a seasonality factor that has played spoil sport there, but it has guided for high single-digit growth. So it's fairly optimistic on recovery of its India business going forward. Aside of that, it has also raised its margin guidance marginally from 16% to 16.5%. Now, if you look at what the brokerages have to say, Nomura has upgraded the stock target price of 4,963 rupees per share. It says that the earnings, of course, have been supported by lower costs and lower tax expenses, and the intent to pursue acquisition is something that it has looked upon pretty positively. And if you look at Macquarie, that has an underperformed rating on the back of weakness in its India business. It says that profitability could get hampered or could remain under pressure because of the weakness in the India business. But if you look at the internals, both foreign investors as well as mutual funds, they have upped their stake or they have hiked their stake in the stock in the September quarter. And if you look at the stock, it has done fairly well on a YTD basis. It's up somewhere around 40%. And now, if it's looking at further acquisitions to boost growth, looks like the street has taken to it pretty positively, Santo.
Well, and with that, it's a wrap on this edition of Closing Bell. Thank you for watching.
Thanks a lot for tuning in. Of course, we'll be back with the markets at 8:30 a.m. So don't forget to tune in. But for now, it's a goodbye from me and Santo. Stay tuned to Moneycontrol for all your other news and updates.